The Dow traded down today, down 43 points. It held up reasonably well, but near the close they started selling it off. So it's doing the expected, where they might be coming back to the T-line for some profit taking. Is this a change of investor sentiment? Not really. There is a bearish Arami, which tells us the buying has stopped, and confirmation that there's selling. It hasn't closed below the T-line yet, so that allows us to give us another day to see whether they support on the T-line and take it back up. Is this hard selling? No, because the other indexes did not confirm. For example, the NASDAQ traded absolutely flat today, right on the T-line, not showing any massive selling. So if one index is trading flat and the other index is trading trading down, what's that basically tell you? It tells you there's really no major change of investor sentiment in the market. It's just kind of shifting some funds back and forth. What does that do as far as providing information? That allows an investor to take advantage of price patterns that are in the making and does not zig them out when there's some little backing and filling on some of the charts that are still relatively strong but haven't completed their fruition yet, or their price move fruition. For example, our reiteration of a buy on MLNX was due to the fact that we had a large belt hold signal, which in candlestick analysis tells us that a lot of the selling has been sopped up here at the bottom of the market. It sold off a little bit more, which is not unusual after a belt hold. We're basically in a big downtrend. A lot of the selling was sopped up. This has been in a downtrend. A lot of selling still continuing. But then we saw a morning star signal, another major signal in candlestick analysis, closing right on the T-line with stochastics coming up. What does that give us as an opportunity? It tells us if it opens positive after this buy signal, after we saw a lot of the selling has been sopped up, that we should be starting to move in an uptrend. Not only an uptrend after a good buy signal, but in an area where the selling has been pretty well eliminated, which means there's probably not a lot of sellers heading into the next uptrend. The positive open did two things. It confirmed that the Morningstar signal was working, number one, and number two, it told us the T-line was not going to act as a resistance like it had been all the way down. It also allows us to decipher whether other patterns are still in progress. For example, in DWA, we recommended this last week, with it coming out of a fry pan bottom, did the expectation, came up to the 200, did a sell signal, has now pulled back to the T-line, which is not unusual. What happens after a fry pan bottom? Usually a strong price move. What happens after usually a strong price move? Either they reverse it or there's some profit taking. We can tell the difference between profit taking and a reversal based upon the magnitude of the candlestick signals, sell signals. In this case, they've brought it right back to the T-line. If we see that they're opening positive and trading positive, this becomes a very high probability buy, because now that J-hook pattern tells us they're going to take it back up. If they get back up to the 200, they're going to go through. Using candlestick signals and patterns allows an investor to put money in high probability situations, knowing what the expected result should be and what the expected result should not be. This means an investor can stay with a trend as long as something doesn't change that trend, or if they get into a position that's supposed to do something and it shows a reversal right away, they're right back out of the trade and move on to something else. That'll be it. We'll see you in the chat rooms.